don't overpromise and underdeliver. Like so many people, I think in life do that, especially founders, which is okay. I get it. You have to like sell the hype, you have to sell the momentum. But once you do that, you actually have to deliver. You sold us on the sizzle, but if you want more money from us, the steak has to taste good. You can get us on the first check, but if you want follow-on capital, if you want more investors to believe in you and put in, it actually has to taste good.
What's up, everyone? Welcome to another episode of Demo Day, the podcast for entrepreneurs and venture capitalists, where we demystify the culture of joining one of the top accelerator, incubator, or VC programs from around the world. I'm your host, Sean Goldfaden from Coefficient Labs, and on today's episode, we'll be interviewing Jonathan Hung from Trousdale Ventures. Without further ado, let's get into Demo Day. Jonathan Hung, welcome back to your second official episode here at Demo Day.
That's right. In person, too.
In person. Yeah. Last time we talked, it was literally the heart of COVID. In fact, I think it was just a month or so, 2 months into it. And a lot has changed. You've made a big shift from Unicorn Ventures being kind of like front and center to now working with one of the most recognizable brands in the country.
Got it right here, baby. Brought it. Brought props, Hey,
let's go.
Props, yeah.
You're now, leading the charge at Trousdale Ventures. So I'm excited to dig more into what that experience and that journey was like for you. For those of you listening at home, Jonathan, LA native, grew up here, USC, ended up going to MIT, Wharton, entered your family business to help your family take over, and you've had a incredible career in both investing out of your own family office with your friends, and now you're doing everything under the sun in entrepreneurs. So I thought it would be a great way to start, just to kind of learn how that transition happened. I mean, I think there's a lot of people that are like, wait, what? I didn't even know Entrepreneur had a venture fund.
I get that all the time. Yeah.
And so, maybe you could just talk about the origin story. And of course, we can dig more into your philosophy, your investing strategy. But maybe, give us a little story. How did the transition into Trousdale Ventures happen?
Yeah. So, I spent a lot of time at Trousdale Ventures. I love Philip. He's been my friend since he was 21. I was 24. And so, it was a great family office. Can't talk too much about everything we did, right? Under NDA. No, I'm just joking around, but like kind of. maybe not. But, great time. And we did so much together. It was always great because he wrote a check, I wrote a check, and we invested in a lot of great things. It's funny. Sometimes I get blamed for some stuff there. And I'm just like, that wasn't me. I wasn't even Philip. So the other guys, but whatever. Hey, you wear it proudly. For me, when I was at Trousdale, we saw a deal there, and I liked it. It was kind of like an Upwork Fiverr movement. It was services. Like, not a lot of VCs like service business. Not a lot of VCs like CPG. They hate it, right? But I actually like it. I enjoyed it. My family made a boatload of money doing that. We sold to Costco. We sold to Burlington Coat Factory, Amazon. I mean, these are even Walmart. We sold to Sam's Club. My dad had to sue Walmart, right? We didn't sell them no more. We've seen it all. But for that perspective, like, we were on the cap table of a company, don't want to mention it, but like, Entrepreneur was also invested in it, Entrepreneur Media. And we got to meet, and it was a great opportunity. For years, people were telling them, hey, we want to, people were pitching like, let's raise $100 million fund, $500 million, right? But like, you're a media company, right? We got to slow down, pump the brakes. I think like I'm writing a book right now, and one of the chapters is like don't overpromise and underdeliver. Like so many people, I think in life do that, especially founders, which is okay. I get it. You have to like sell the hype, you have to sell the momentum, but once you do that, you actually have to deliver. I had an investor, and I was in a meeting once. I thought it was so interesting. I stole it. I stole his line. He was like, and I talked to the kid who, and he's not a kid, he's getting married soon, but like I talk to Josh all the time, and I was like, we're going through like, he's going to get an exit, but it's not going to be the greatest exit. But, this guy told him like, hey, you sold us on the sizzle, but if you want more money from us, the steak has to taste good. And I was just like, I use that all the time because it's true. It's like, you can get us on the first check, but if you want follow-on capital, if you want more investors to believe in you and put in, it actually has to taste good, right? We had to come back. I always joke like, those Outback steak commercials look great. That sizzle looks amazing, right? But does it actually taste good? Would you go back? And so with entrepreneur, it was, I'm not going to overpromise and underdeliver. I said, let's go do think slowly. Let's go raise a small fund under 10 million. Let's see what happens, but we are not going to like fight for deals with Andreessen or even the guys in LA. That's just not going to happen. Or even at Trousdale. We're writing much bigger checks at Trousdale. So my perspective was, I think some of the best investments I made was some of the smallest checks I wrote, like 25, 50K. So I said, let's go on a lot of dates. Let's go date. We're a dating fund. I stole this thing, and I'm going to give a shout out to him, Ken Fox at Stripes. He was pitching me at the JP Morgan office in Century City when I was at Trousdale. And he was talking about, like, he invests in some of the best companies, right? A24, Irwan, right? I mean, and his whole thing was like, we date our founders 2 years before we give them a check. And I was like, well, why don't we just give them a check and date? Right. And then decide like if we should actually get married. Right. So that was my whole philosophy. So that's what I told entrepreneur. I said, look, we write 25, 50K, and I'm not going to lie. I always tell everybody this, CPG gets 25K. One guy got more, but we'll save that for later on why he did. But it's usually 25K for CPG, consumer tech, and 50 for more advanced tech companies, right? And what we give them is media coverage. Like, this is a powerful tool. This, I always joke with people. It's just like, I'm ad in our magazine is crazy. You're talking about like 50,000 for a full page ad. Like this is an ad. I'm not gonna show this, but this is an ad for like Graze. I actually invested in Graze. I'm an investor. I know Buck Jordan really well, and he got me in this. And I said to Buck the other day, like, why is like we have a house ad, and I didn't pay for this, but it's great. We get that coverage, and we could get you on our podcasts, just like we have this. We have a network of that. We have a TV network too called Entrepreneur TV, where I'm a judge on Elevator Pitch. I'm going to be back the next season as well. And we could get you that exposure. People go on Shark Tank all the time, right? They need coverage. I mean, just because you get the money, what do you do with the money? How do you reach the right audience? Does matter. And Entrepreneur got that. And so, I bought the domain entrepreneur.vc. Thank God they paid me back. I mean, it wasn't a crazy amount, but there was still a comma, and 5 digits. So I'm like, geez, okay. And we started it, in 23, 24, we started investing, and now we're out to fundraise, with outside capital.
Now, you had told us a story on the last podcast in, going over to your family business, and you said, no one was a harder critic than my dad. And, you have a level of loyalty, duty, all of the growing up kind of way in which your relationship is. Then you move into Trousdale, you're working with your best friend, and you've always had these very close relationships, but now with Entrepreneur, it feels almost like a step outside of your comfort zone. Bring us into like your mind space. Are you to the extent you can discuss your own nerves?
Yeah.
Is it something that feels different? You have this amazing media, partner in the back end, but, what are the things that get you the most excited? What are the things that make you nervous? There's always the chance that things don't work out. And so bring us into your mind of like, what are you most excited about with this new venture? And what are you most nervous or scared about?
I tell people this when I pitch them like our fun and talk about what we're doing. Look, I think I'm not doing this for experience anymore. I break life into quarters. Like first quarter is like you're 0 to 20, just a kid. Second quarter, you're 21 to 40. And, toward the tail end of my second quarter, I actually became a dad like yourself. I have a 1-year-old daughter named Charlotte. It's amazing. It's totally different, and I always remember thinking about my dad. He said, you're not going to know the type of love I have for you until you have a child. And it's true. You just, picking your mate is different than picking your child. She's there, and it's a different type of love. And so you see things differently. Your perspective does change. I mean, I had an ex-partner once, he was like, oh, people don't change. I'm like, I don't know. I think they do. I mean, like, how are you the same person when you were 20 years old versus now that I'm 42, turning 43 later this year? There's no way. And so for me, even with something like Entrepreneur, it's a great brand. It's a great media company, but it's not just a brand, it's the people. Like, I get to work with Bill, he's the president of Entrepreneur. I get to work with Ryan, he's the owner. And I fortunately got to meet his father, Peter Shea, who started this business and ran it for so many years before he passed. And it's family too, right? You don't think it's family, but it absolutely is. I mean, it's so funny. I was like in New York Tech Week recently, and they were talking about at the Centauri, LA or New York offices, and they talk about how like, they're a family business, right? They're a huge conglomerate now, but they bought Jim Beam, Maker's Mark, and they're so family run. So just because you're part of a corporation, because when you think about America, you're not built on Fortune 500, CEOs or companies. You're built on like the Walton family is Walmart, right? Amazon is Jeff Bezos. It is personal. Like, I don't think, like, yes, it's like The Godfather. It's not personal, it's business or whatever, like it's not, no, it's all personal. So you have to like the people you work with. And that's where I'm at. I got this great opportunity, to transition into this opportunity where, I could have more of an influence. I wouldn't do it. I would have just invested with Philip and work with a family office, but this came an opportunity where I could help my founders a little bit more. I help my potential LPs and GPs. So you ask like what I'm worried about, it's not about the venture part. I spent 13 years doing this. I spent more than 20,000 hours. If you're an Outliers, Malcolm Gladwell person, and I spent my own money, like, 10 plus million doing this personally, not other people's money, not OPM, my money. And so I've had successes, I've had failures and more successes along the way. So I feel confident in that. Now it's different when it's your money versus other people's money. I used to be a financial advisor, and, when you're buying Apple, you don't look at the stock like, so close. Is it going up? Is it going up? Like, should I hit the button now? Should I wait? You just treat it. It's like OPM. But for me, it's different. I do treat it as our money because I've been an LP in over 30 plus funds, a lot of them here in LA, some outside of LA. And I get you were limited partners, but I still focus on the partner part. I still feel like we are doing this together. I never understood when you go to an AGM and it's like, oh, you're in this fund? You're in there? Like, you meet people like you didn't even know they're like, why should you not know who you are investing with? Right? Like, I don't want to gatekeep. I'm not here to just like make the most money for myself. Like, you're supposed to do it with this team of great people. So my only goal now is with who we get as LPs is like, it's really good partners. It's really good people you want to work with, I mean, I joke around when people say like, oh, no assholes. You know what? I'm cool with an asshole as long as you know they're an asshole, right? It's the scumbags you got to worry about. The guys who are just like, oh, Sean, you're so great and wonderful, but behind your back, they're like, stabbing you, and talking shit. Oh my God, that's the worst. I've had horrible partners like that. And that's what I've journeyed through and seen. And people like who just say what you think you want to hear, and then not actually follow through, and they had other motives. Like, that's the thing. When I had an ex-partner say that people don't change, it's like, it's not that people don't change. It's that you actually weren't just being truthful of who you actually are.
Now, how do you, there's such a balance, especially when you're looking for LPs, when you're trying to get investment. On one hand, you're trying to acquire the monies. On the other hand, you're trying to say, is this the person I want to spend the next 10 years with, right? The partner part of it. What makes a great partner in your mind, especially in the LP venture world? I think that, this podcast, in our last episode, we covered so much about the founder journey and about being an investor for founders. I think there's a lot of people now that watch that want to know about building a great fund and being a great investor. And like, talk to us about what being a great partner means to you in the LP world.
It's like getting a great customer, like Apple. Like, you want guys who like Apple products, like 100 of those, or do you want 10 fanatics who are going to be like, oh my God, there's a new Apple product, pre-order. Like, I didn't buy the glasses, but, I bet you a bunch of people did and pre-ordered it. And, that's the kind of partners and customers you want, who are just loyal, right? And you build that trust, and they could share amazing things, and they're your biggest advocate. Like, we have a marketing piece because we're a media company, absolutely. But the people who I bring on now as LPs, they're going to be like, oh my God, it was such a great experience. It was such a great opportunity to work with Jonathan and the rest of the team at Entrepreneur because, they were so open and transparent. And it's like, here's the thing. Is there going to be a difference of making 18% versus 20%? In the grand scheme of things, no. If you're a family office, they're not the same. Every family office is different and unique. And I've heard this great term once at a family office event. The guy who told me, personal dynamics is greater than economic return. And that's so true in finding a great LP too. It's not just about, look, if you're looking for institutional money, absolutely, all they care about is return, and they could hit their numbers, right? And you could get DPI and you get them. I actually have someone call me now who's a potential LP. I can't, we're in a podcast right now. All right. But hey, if we weren't, I'd pick up right away. Sorry. sorry, Sean, but it really is that. It's that they would go to bat for you. Those are the people you want at your funeral. Those are the people you want. And I kind of, as I alluded to, I'm trying to write this book right now, and I'm debating between two titles. And I think I know which one, but I'll give it to you. It's like the title is pretty simple. It's going to be either Your Emergency Contact or Emergency Contact. And it dives into my space of doing venture capital for the last 13 plus years. And it's really about, look, it is about the relationships. It's not about the numbers. We could go through all these numbers. I have the degrees too. I could hire a bunch of people from Stanford or Harvard or MIT, and we could go into the numbers, but it doesn't tell the story. It doesn't tell you how they feel, the personal side of it.
When you talk about the concept of, emergency contact or your emergency contact, is it the same line of thinking? I was, I love this thing from Jesse Isler. He talks about the 4 a.m. friend. Is it the same thing of like, who's the person you call at 4 a.m. and you're in a bind, and it's like, who's going to pick up the phone?
Yeah. Because it's different from your partner, like your significant other, or it's different from your co-founders, right? Because they're there day to day. Like, not necessarily 24/7, but almost. But your emergency contact, I feel, is a person you can trust. Maybe you don't talk to them daily, you don't talk to her daily, but if I reach out to them, they'll get back to you. They'll talk and say, hey, I need help with this. What do you think I should do? Just like figuring out your title of your book, right, that I'm writing, right? Like, who do you trust? Who do you think is great, right? I think a lot of people, when they go fill out that medical form, it's like, hey, my parents, when you're young, in your first quarter of your life, right? And then when you transition to the second quarter of 21 to 40, it's probably the person you're in a relationship with. But then who's your business emergency contact, right? Who do you talk to when you have to make this tough decision,
I'm laughing thinking like the next time I go to the doctor, I'm going to put Jonathan Hung on my emergency contact.
Yeah. That might be the cover of the book. I mean, I was just talking to my book cover illustrator today, and I'm like, that, because that you think about that, right? I mean, like, it does matter because, I'm in my third quarter now, and I think third quarter is from 41 to 65. It's not doing this for experience. I'm not here for VC experience. I'm a venture capitalist now. I'm not here to getting acting experience. You're an actor. And who do I put down as my emergency contact? And I have great people who I would reach out to in my business, right? And my emergency contact when it comes to business isn't my wife. I'll talk to her, right? But when it comes to my daughter or personal stuff, absolutely, she's who I put down. But when it comes to business, it's a different person. It's this person, who you work with, who understands the grind that you're going through. Another founder, perhaps another GP, another LP, and you would talk to them because they're in your world. I mean, I always remember like interviewing. When you were younger, coming out of college, and just like, you just want to tell them what they wanted to hear. But really, I think the interview was really like, do I want to spend time with this person? Like, I'm probably going to spend more time with this person from Monday to Friday, from 9 to 5, maybe more, than I will with my own family members. Because sleeping doesn't count. Just because you're sleeping next to someone, you're in the same house, doesn't mean you spend time with them. You're there physically. But you're going to spend like 8-10 hours with some guy or girl in the work week. Like, I have to like them. Like, doing the job is one thing, but like, do I actually get along with it? Because everyone's been in that situation where like, it's not that you dislike, you hate somebody, you hate working with this person, or you hate that, and it happens to the best of us. You want to build a great team, and everybody talks about that. And so it takes time though to build a great team that you trust, that you want to work with, that you want to spend time with.
Absolutely. Now, I got to turn this on you. I'm super curious.
Yeah.
So, you talked that, over the course of your career, you've had these moments, don't blame me for them, but that there have been moments when the weight of the world is on your shoulders. There are certain decisions you have to make.
Yeah.
Who is your emergency contact? Who's the one person that in the darkest hours that you would really feel is the person that would be your first phone call?
Now or before?
Your choice.
Because before, honestly, it was my father, and that's kind of cliche, but I wouldn't have said it was him for the first quarter of my life. It wasn't. From 0 to 20, he was not there. And I don't blame him because he was building a pretty good business. And he was traveling all the time and getting out there. But I would say my emergency contact when I was in my first quarter was my mother. I spent more time with my mother than anything. growing up. And then really to the second quarter of my life, the 21 to 40, and really in the 30s, like you got to see my father as not my dad, but as the boss.
Mm-hmm.
And you got to learn from him. And like the lessons he taught me you didn't think of it then, but it strikes me now because I'm going through the same bullshit.
Mm-hmm.
And it's just like, I'll never forget when he used to tell me, is like getting mad at me. He's like, why the F are you bringing this up to me? And I'm like, because you're the boss. Like that's the thing people don't get. Like, and I've heard great people like Jeff Bezos talk about, like, a great boss is you don't tell them all the good stuff. It's all the shit that they have to deal with. Like, you have to tell me what to do in this situation. Cause like, yeah, oh yeah, we're returning $1 million, we're returning 100x returns. Like, that's great. Who doesn't want to give that good news? But it's the bad news. It's when you're the president, and then you have to make these tough decisions, and you get and you're leaning on your experience. And my dad used to call it the blind side. Like, you always have to worry, but you just don't know when you're going to get hit for the randomest thing. Nowadays, when it comes to my emergency contact, I definitely lean on my wife for a lot, especially because we have a daughter, but also I talk to her more because I, you know, I'm a different person than I was when I was in
Mm-hmm.
my 20s and 30s. It was really, I was trying to do venture capital, do different things, work this job. And I wish I made different choices then that could affect me now better. But she's definitely my emergency contact. I have another friend of mine who I worked with, her name's Sahila. She's on our webpage too. She's an advisor to our fund. Anybody like Philip too, I would call him. These are people that I care about, that I respect. They give me really good advice, and I would talk to them and say, like, what do you think? And here's the thing, each one is different. Like, sometimes you need stick and sometimes you need carrot, and
Mm-hmm.
sometimes you just need a different perspective. So the book that I'm writing is not about just emergency contacts. It's just your emergency contact. It's who your person should be to help you, guide you through these things. It's not just one person.
Maybe you can dig in both
Mm.
from a personal perspective as well as the book. What qualities should one aspire to be the emergency contact? Like when you kind of shed
Mm.
the layers away from Philip or from
Yeah.
was it Sedacia?
Oh, so Hyla, yeah.
So Hyla,
Or my wife, yeah,
like
Caroline.
when you think about it and take a moment to be almost introspective,
Yeah.
what are the qualities that they have? Because when it comes to investing in startups, I want grit, I want teamwork, right? I want these things. But when it comes to the person that you trust the most in the darkest hours, what are the sort of qualities they resemble that other people could maybe take something away from?
Can I tell you, it's because you just get frustrated with them too. Because like real relationships, it's not just the ups, it's the downs. And you're going to fight and you're going to feel this passion. It's not like, oh, I'm cool, collected, no. It's that, like, you're going to fight back and you're going to hear it and you're going to be able to walk away and come back as family, right? Like, you could probably get angry at a friend and not talk to them for years, right? So they really weren't your emergency contact. But it's someone who would like speak truth to power and tell you, like, they know you more. That's what my wife tells me all the time. Like, I'm telling you, well, you don't want to hear, but you need to hear it. And that's the truth.
Hmm.
That really is the truth. And if somebody can't take that, that's okay. You're probably not their emergency contact, right? Because it's not going to be like, hey, everything's going to be okay, champ. We'll get them next time. It's like, this is what you need to hear. And I think that's the best quality in somebody who is your emergency contact.
Now, I feel like a lot of the VCs in this space, or at least the peers and colleagues that I've, grown with over the last decade here in
Yeah.
Los Angeles, are either right in the midst of their third quarter, they're just getting into their third quarter.
Yeah.
And I feel like, you can tell me your perspective, but writing a book at this age is a little bit on the line of a memoir. It's a little on the, I want to introspect.
Still going. Yeah,
it's
going.
kind of like it's like allowing yourself to kind of get caught up. And so for, at least for me, I know I've thought about writing a book. I'm sure many people think about it, but, give us sort of the, what brought you over the hump? What got you actually moving forward? Was it an idea? Obviously the emergency contact is something top of mind, but maybe you can talk to people about what the process is like to start a book. You're like, I have an idea, and then scene.
It really is because like I'm with this new family. I'm with this opportunity. Like this is it, right? Entrepreneur is a media company. They have a publishing wing, Entrepreneur Publishing. And I saw it and I was like, oh, this is a resource of mine. Why shouldn't I use it? You know, especially because I'm going to go raise money now. And like a lot of people can write a pitch deck and talk about like, oh, their terms. But to write a book is something more unique to talk about the lessons. You know, like Ray Dalio will probably talk you huge about how he was so successful at Bridgewater. But now you read his book Principles, and it's a different way because hear about the stories. Like how you made that decision, how it went up to it is more unique. Because sometimes the book that I'm writing, and I look, I'm not gonna lie, I'm working with somebody on it, obviously, because like it's still me, it's still my stories, but you have to be able to communicate it in a thoughtful manner that people want to be engaged. It's funny, I deal with my editor all the time, and she's like, "Hey, that's a little too raw. You really want to be this like exposing yourself?" But like, well, that's what my dad said. You want me to pretend you didn't say the F word? Like, like because that's what made it stuck out. So it's like, yeah, that's what he said, or just like, it's like keep going. I'm like, no, we're like, you want real life drama. You want real life, I don't want to say trauma, it's more drama, that this is how it should be, how it is. Like, I appreciate founders telling me what actually happened, and not just like,
Everything's great.
yeah, oh, we're good. It's like, if they're not willing to tell you the truth, then yeah, you don't have a good relationship. You really don't.
So, you come up with this idea, you understand, maybe I could leverage some of the resources at Entrepreneur. I have an idea. What's like actually the first step? Is it finding an editor? Is it finding a writer to work with?
It's so interesting. It's you get a book architect, and I'm going through it right now.
A book architect.
Yeah, and you tell them what you want, because it's when you think about, like, I met Blake Masters, right? And I met Peter Thiel, and talking about 0 to 1, and it was just like, wow, Blake was a student in his class and he wrote all the notes from his class. And it was Peter's thing, but he didn't write it, right, per se. But you read it, it's like, oh, you see it in a different light. Like, wow, you really. And I've advised like some of my partners or friends like to go through it, and they should see it, because like, don't even write the book, just do an architect of like what you think the outline should be, and then you can fill in the blanks. But then, wow, like I have 8 chapters. That's what the chapter is going to be, and each chapter is going to be unique to how I view venture capital, how I think I've been successful at it. It's not a copy and paste. It doesn't mean everybody is this is the blueprint to success, but I think these are lessons you could take away. I think about when all the schools I went to, all the people I've met, been my mentor. It's like my dad. It's the 1 or 2 sayings that stick with you. You're not going to remember every word on a book. You're going to remember what matters to you and the lessons that matter to you. And it's like, oh yeah, and that relate to your life, because that's what it is. That's why I think I'm going to probably call it Your Emergency Contact, because it's more personal, and it's not just some random. It's just like the word emergency contact, right? That's just the thing. This is like, it's more personable when it's your. Even though it'll be in the Y section instead of the the middle, but that's okay.
Yeah, I was going to mention, I do think I love the Your Emergency.
Yeah. The editors told me that. I mean, that's the thing. See, you have an editor to help you with the process. Because I would have been like, what would have been first? I would like, in case of emergency, right? That would have been the title of the book.
Yeah.
And then it was like, that's probably more like crisis management.
Yeah.
And it's like, it's true. I didn't think of that.
And so how did you go about finding, so just to repeat back to you, there's someone or some person that considers themselves to be like a book architect, right?
Yes, that's their job, because they could summarize what they're not even your ghostwriter. They're not even there to write the book. It's just like, hey, this is what you should consider. This theme, this outline, this thing, and then expand upon it.
And then did you reach out?
Like Cliff Notes.
Did you reach out to friends saying, hey, I'm thinking about writing a book. Do you recommend? Like, how did you find this person?
Oh, well, as I said, like I was fortunate because of my connection with Entrepreneur. They have a publishing wing. It's called and it's working with the Authority Company, and they've published a lot of great people, over the years. And I'm just like, oh, wonderful. Why not?
So you have your first meeting with them. You don't really know what to expect. You never worked with a book architect. So you go.
And it's not cheap,
And so what is that experience like? Did you come prepared with anything? Do you just come completely like?
It's like an interview. You're just it's like going to therapy. It's talking about what matters to you, what thoughts you're passionate about. You can make it up, because it's like everyone thinks their story is unique or different. but like, can you actually, because they'll call bullshit on you. Because like you've heard people like it's like I imagine it as like being in Hollywood and you all these people write scripts, right? And like you got to have somebody to read it, an agent, or somebody, studio head to be like, oh, this or that, like, hey, this has been done before. That hasn't been done. And they'll do the research for you and be like, oh, this isn't unique. This is a different way of interpreting it. Right. Yeah. Like there's so many grit books or Be Relentless or, all this like motivational stuff. And for me, it's not necessarily a motivational book. It's more about like, it's part memoir, not really, because I think I'll write that later on in life, God willing. If someone will buy it. My wife thinks no one will buy it. So, hey, this is like, hey, that's how she's my emergency contact.
Right here. Your first customer.
Okay. Thank you. Thank you. All right. Thank you.
Number one right here.
Thank you. All right. There we go.
And then so you leave this first meeting and you're like kind of like a therapy session, like, wow, I got a lot out of this and just talking about it. Then what happens from there? Do they then take the ball and kind of build an outline? Yes. Do you have to go home and come back with homework? Like, what's the second step after you've had like the first meeting?
Oh, and then you go through and then you interview people who want to help you write the book, right?
You interview writers.
Writers. Yeah. Because look, have I written stuff? Yeah, I've written theses, this and that, but it's different. It's more academic. This is also, you want to be relatable to people, right? And so, there's people who I think were great writers, right? But it's also like a fit. You got to make the guy I like, he's great, and we fit, we click. He's actually younger than me, but he's great at communicating, my thoughts and processes, and like, and then you have your editors and all. It's a team. It's really finding the right team, just like doing venture capital, just like doing a startup. You have to have a really great team, and they're going to tell you like what you need to do to promote it, what you need to do to get it out there, right? But for me, it was weird because I started teaching a class actually by chance this
at
year.
USC or
no, we're talking to them. I'm talking to them.
Come on, USC.
About something, show some love, right? I got to help the entrepreneurship program.
Alma mater over here.
Like beat up UCLA a little bit, right? But it was by chance I got this opportunity to teach at La Sierra University.
Okay.
It's a smaller school out in Riverside, and it was called Principles of Entrepreneurship. Unfortunately, the professor doing it was, I guess, got some sick. I don't know. It was not my, I wasn't told, but it was like a 10-week class, and like I was at CES and I got like, not roped into it, but I'm like, all right, I'll do it. I didn't know what to expect. I never taught.
First time you've ever taught a class before?
Yeah, and I had to come up with a syllabus, like, thanks, ChatGPT. No, I'm lying. It wasn't ChatGPT. It was something else. All right. But I was like, let me do my day-to-day, show them what I do, right? How I looked at my old professor stuff too. And I thought about, damn, I wish I had a book. And that also is kind of the reason I wrote this, because if I could give this to somebody and they would actually read it, and it'll be like, they'll understand my investment philosophy or how I view the world, right? This is a much better tool. So that's why I decided to write
more scalable for sure. And then you can talk about it on a podcast.
Yeah.
Or you can do it on a lecture series.
Yeah, I'm not going to sell 1 million copies. That's not the goal here, right? It's not Dan Brown or Malcolm Gladwell or like, all these great writers. It's just like, oh, well, we could talk about that. Each chapter could be its own lesson itself and go from there. And like, you see these worlds where there's like a friend of mine's doing Icarus or like Maven, Gag, and I saw him do a talk, and just like, wow, you don't have to just go to school to listen. Right. Everything. I invested almost in the master class back in the day. Right. A massive online course. And it's like, the next amazing founder is not just someone who went to MIT or Stanford. It could be somebody halfway across the world, and they took a lesson or heard this, and that motivated them to do that. And that's what I think could be important, because the world is different now. And like bandwidth, we're just joking how much gigabytes it takes to do a podcast, right? But to record something, to watch it, the Netflix of the world, the YouTubes are taking over. You could get so much content.
Are you able to talk about any of the chapters of the book? Any of them, we could either go through several of them, or if there's one in particular that like really stands out, but I would love to, get an idea of like, what are some of the lessons that are getting brought up, or that you find yourself like smiling when you talk about it? What stands out to you that you're excited about?
I'm still working on this chapter, the phrasing of it, because you got to like understand, because like
you got to massage it a little.
Yeah, I love the massage, but like I like the first chapter. Like I don't like, we're not gonna change it. It's gonna be called what it's called. It's gonna be chapter 1. Go on a lot of dates, right? I think if you want to be successful in venture, want to be successful at startups, you have to go meet a lot of people. You got to go talk to a lot of people. You have to go find the right partners. You have to find the right VCs, find the right teammates, right? Because it's not like, oh my gosh, I met a guy at Harvard across the hall and now we're co-founders and we started, the Facebook or something. You know,
Hmm.
that day and age is a little different now. I think, for me, it was always going out. Like that's how we met, right? Hanging
Totally.
out, going to all these events, seeing things, getting out there, right? I mean, I always remember an AP literature teacher of mine at Buckley. I'll give him a shout out, Mr. Rains. And
Let's
like
go, Mr.
he
Rains.
he would always he said this to us, this is back in 2000, 2001. And he was like, you know what? It was like a lesson. We were talking all this literature stuff. And he said, everybody in this room is probably going to find their significant other within a 2-mile radius of their life. Remember, this was no iPhones, there was no Tinder, there was nothing. It's like, and when you think about it, like that kind of made sense. It's like you're going to meet your wife because you went to this school or you worked at this place within a 2-mile radius. And that's kind of sad because you think about all the movies. Oh my God, you're going to meet this amazing princess far, far away, right? But
Hmm.
it was something unique and different. But at the same time, you still got to go on a lot of dates. And so for me, when I started venture capital, I didn't know what I was doing, but I had to get out there. I wasn't going to read it from a book. I had to go meet this person, that person. And I went on a lot of bad dates and some good ones. And that's what it was. You got to get out there. You can't, and I took this from a good friend of mine. I mentioned this in the book. It's like, KK, he said, we were in Newport Beach once, at a restaurant. And it's like, they gave us a really shitty table. And you know what he said to me? He's like, he went up and asked, hey, do you mind if we get this table here? Like whatever we could do. Like maybe we spend a little bit more, do this. And then he came back to me, Johnny, look, number one rule in sales, if you don't ask, the answer is always no. And it's so true. If you don't ask for something better, then that's like you're good salespeople, don't take no because it's always no, right? Right. It's always, you got to get to the yes. And there's books about that too. And I thought that was so important, but the only way to do it's like you go through a lot of failures to get to success.
Now, how much of that is self-drive? You saw and grew up watching your dad, a successful businessman on the hustle, always out there. And so you had such a great role model when it comes to that component of like, it's a never-ending game. You got to make
Right.
your own destiny. But I feel like things have changed so much after COVID.
Yeah.
You and I, we met in real life to some extent, but it was like we
Yeah.
really first started talking over Zoom, and that's progressed onward. And it's so easy for
Yeah.
people to, tune in to a meeting or a conference. But,
Yeah.
I keep seeing you out, whether it's Tech Week, whether it's
Yeah.
Dallas at Sub Summit,
I
you're
know.
in New York, you're like, you have this drive and this belief
It's more curiosity because it's just like, how do you know it's bad unless you actually go through it?
Mhm.
I mean, like, I love how people give their opinions and like are so adamant when you never actually did it. Like, how do you know unless you actually did it? And I could tell us, like, we were in Dallas here. We could talk about, yeah, it was a conference with but you love this. And like, we could talk about it. And then you could share that mutual experience. And that's
Yeah.
how it works. Like, I do agree, like, you still can work from home, but you got to meet in person.
Mhm.
Like, even though my team's dispersed right now in Entrepreneur, we still got to meet up here and there. Like we had a team dinner yesterday just to have hot pot, and talk. And it's different. You're going to hear things that you wouldn't think of that came out of the blue, right? Where it's like in your structured 1-hour Zoom meeting, it's like, I better hit all these points, and thank God for these note takers, like circle back, right? Oh, I got to follow up. But I still love meeting people all the time on Zoom. Like I built a career out of that too. Yeah, that's important.
Now, when it comes to raising money, you mentioned that right now you're continuing to go and raise money for the fund and get the investors in. What exactly are you looking for in the right partners? I know I asked before what it makes a great partner, but when it comes to just like the position you're at, there's so many VCs in today's world right now where like times are tougher than they were. And,
Yeah.
what strategies do you utilize to help drive impact across that key metric of raising money from LPs?
You have to believe in my vision. You have to believe in what we're doing as a fund. As I said, we're a dating fund, right? We are not similar like most venture funds. You know what most venture funds do? And I know this because I'm an LP in 30 of them. And I've seen the docs, and I've seen ones that have failed, and seen the ones who returned some money, and seen the ones who are just like selling unrealized returns that may never happen. But I share something unique. Like, well, this is not, we're reserving 50% on follow on. We are emptying the clip. Whatever bullets we have, we will fire away. We are investing not in 30 companies, not 40 companies. We're investing in 150 to 200 companies,
Wow.
5 times more than other people, because we're writing smaller checks. Like, some people say, like, well, why don't you raise more? Like, why? Like, it's not going to give me better deals. You know, you want me to put, instead of a 50K check, I put 250K? Why? What would be unique or different? You know, I want you to be scrappy. Like, and also, like, part of my philosophy is like, my confidence in getting to the yes for an investment is that you have other people on the cap table. It's not just me. I want you to have other friends, other dates you've gone on to go and do this successfully. So my philosophy is simple. It's, I tell people, look, I'm hoping I return money for you as venture style returns as best as I can, but it's not going to be because we followed on as well. It's because you're going to also hold reserves personally, because I've been feed to death, SPVs, fees on fees on fees, and I think you're a complete sucker if you spend money on an SPV before the Series A, before product market fit, because it's like you're just paying for someone's rent. All right, if you're giving them an SPV fee.
Explain that a little more for
Yeah.
for people that either don't understand how SPVs work, or like play out, educate me a little on why that would be a sucker move to do that in that environment.
Because you want good deals. And when you're paying for an SPV for like an angel round, or like a seed round where they don't have a lot of revenue, they don't have product market fit, it's like they're probably not even going to survive. Really, they're not. And so, like, why are you getting charged money? They need every amount of money they can as a founder, but there's just some person who like is trying to get syndicated to do a deal because they're not really surviving elsewhere. It makes sense if you're paying an SPV fee on SpaceX, because guess what, Elon Musk doesn't want more than 100 direct people on the cap table, so you need access. So yeah, you got to pay because you truly believe you're gonna return a multiple on your money. But when it's so early seed, you have no idea. Like, some of the best SPVs I've done is because of Series A. One company, we were in it with WonderCo. It was called Yasser, and I hope it does really well. They kind of sold it as the Uber of French-speaking North Africa, or just Africa in general. And maybe they pivot into more of a payments platform, more of kind of like Starbucks, where like, hey, Starbucks has a lot of money, right? When you think about it, like everyone puts it on their gift cards and things.
Totally.
So there's not as much banking out there in North Africa as you think. So okay, but it was like this guy came out of Y Combinator. Like, you still don't know when he's come out of the Y Combinator, he's going to get his Series A, but he built it up, and now he's at a better place. And like, oh, and then Bond Capital did their Series A, Series B. And so we did the Series A, myself personally, I can't talk about other people, as I said, but I put a check in, and, Mary Meeker at Bond led the Series B. And so like, look, I'm happy because I didn't have that access at the time, but you saw them, look how great they are now at a Series A, the numbers, the things. And that's what I do for my fund. It's just like dating. I need to date you 18 to 24 months if I feel comfortable giving a marriage check.
Yeah.
Because the marriage check from us is coming from our LPs. I tell them, go direct. I don't want to make fees off of you. If you invest in me all the time, we go out there and hunt together, I will tell you who the best companies are in our portfolio. And we will make that great relationship because we are Entrepreneur Magazine, because we have this media outreach. Then we have opportunities because it's all relationship based. That's the whole theory of my book. And it's why relationships matter to be successful in venture capital. Then you have the opportunity, and it's proven out. I've been like, some of my best companies in the fund so far, because I took a year and a half to actually invest into 47 companies already. So if you're coming into an LP now, you get that at cost. Now, I'm not here to make money off you. I'm not here to pay my baby's future education for this. It's really that I want to find the winners together. Right? Just when I see all these other great managers, like they're judged on their winners, right? Like right now, I don't know when this is going to come out, but Chimes, IPO is coming soon, right? And like you look at it, the information is a great piece about like where you are when you invested does matter, right? And so the early investors are gonna make a killing, but the more like recent, like SoftBank, Tiger Global, they better hope the stock doubles so they get their money back.
Yeah, in Rich Dad Poor Dad they say like the profit is made in the buy, right? Now, thinking about the younger version of Jonathan, right?
Yeah.
There's a lot of like up and coming VCs, a lot of
Mhm.
associates that listen in on the show. And what advice would you give yourself, your younger version of yourself, just starting out now? Like you have so much experience now. Like you said, you're out of your experience,
Yeah. Phase.
phase. And
Yeah.
so if you were to talk to yourself starting at the very beginning of your career again, going into venture, what should junior investors, associates,
Mm.
what sort of things can they do to better position themselves for 10 years down the road as they continue to grow in their own careers?
You better want to make friends in this business. And it's not just finding your partner, because I always joke the year 2024 is always going to be known as the year of the breakup. A lot of people broke up in gender partnerships, all right? From Silicon Valley to here to New York, all right? A lot of GPs broke up. They're not raising their next fund. So in this business, it matters who you surround yourself with. I always tell people who I mentor in college, it's like you're not going to be friends with everybody in your graduating class. So I would hope you have like 5 to 10 people you're going to lean on and talk to. They might do totally different things than you, but these are people who could be your emergency contacts, right?
Mhm.
Down the road that you're going to talk to and get guidance from and listen, and you respect their decisions, and they're really close. Like that's how you build a team. Right.
Now, when it comes to your emergency contact, I was just thinking about this of like, I've had a guest on the podcast. I can't remember who
Mm.
exactly said it, but they were talking about having it may have been Kelly Purdue about having a
Oh.
board of directors of your life.
Mm.
That like it's not just about having a board of directors of your business.
Yeah, yeah,
It's
yeah.
like who is that group of people, and it kind of is of the same essence as
Yes.
your emergency contact. And I was just thinking about how to have that foresight in college and to start to
Yes.
see your classmates as
Yeah.
potential emergency
Yeah.
contacts. Now, what's interesting about that emergency contact idea is that it's a two-way street,
Mhm.
right? No one is just going to be that person if you haven't also built value and trust
Yeah.
and things into them. And so,
Yeah.
what do you think are qualities in yourself that make it so that people want to be your emergency contact? I think that oftentimes it's
Yeah.
easy to look out and, oh, my dad, my wife,
Yeah.
my this, my that. But when it comes to like building skills in yourself that make people want to help you, do you have any thoughts or advice or things that have worked for you? Because you
Yeah.
are such a likable person. What
Oh, I got my haters, Sean. Trust me. Trust me. All right. All
I
right.
believe it.
I think about them more than my best friends and emergency contacts. But I kid you not, I can name names. That'll be the next book. No, it's that you can talk to them. It's been like years, and they'll still pick up and get like, and we didn't miss a beat. It's that trust factor, right? Because I think you can tell somebody you love them so easily. Everyone you hear, you can say, I love this or I love that. But you don't hear a lot of people say, I trust this person,
Mm.
and if someone can say that about you, and this is like, I and I get that. Like I have an associate now, and I appreciate like his just being fresh and not thinking of it this way. But he has his own views on life, and I appreciate them. And I try to guide him in what I'm doing and why this may not work. And like, hey, look, another real estate company that helps you with this. Hey, I heard it 80 times. What's unique? But that's the thing. It's like, it's not just like I'm looking for mentors or emerging contacts who are older, with more experience. It's also people behind me too, who have different experiences, different use cases. Like, I mean, like I totally, like, I'm not trying to say like, hey, get off my lawn. I'm that old man now at my
Mhm.
third quarter of being 42, but I'm just like, yeah, these Gen Zs are different.
Mhm.
They are totally, they view the world differently. And like my daughter is like the last year of the Gen Alpha right now. She's 1 year old right now. And I'm like, gosh, what is she going to use to connect and
Oh
get
my
to people,
God.
right? And you have to think about that. Like I didn't have social media when I was growing up, but I go to these conferences and think about, geez, what do parents think about with Snapchat, right? Or Instagram, and how you have to deal with this nowadays. Like, and how you're going to find people. You're going to find people who have kids, who can relate to you. You're going to go to talk and like, what do you do? Like, what's the right age to give somebody an iPhone? I don't know. You have a young kid too, like, right?
Yeah.
You gotta talk it out and think about it, you
Yeah,
know?
we're like a Bluey only family right now.
Right?
Yeah. Yeah. I mean, it's certainly tough. Let me ask you this. When you think out, your daughter in 20 years will
Mm.
be just around going to school, so like or college, in that
I hope not to school, yeah.
yeah, right. But like, do you find yourself with the knowledge you have of
Mm.
startups, the access you have
Mm.
to startups, you can almost see a little bit more into the future.
Mm.
Do you find yourself getting more excited and or more pessimistic? And I know it's tough to answer that question because of, well, you got to invest in these companies, but just as a father, as a man, you know, do you see Minority Report way out in the
Right,
distance,
right.
or do you see, you know, us coming together and utilizing this new technology? I'm curious, like,
Yeah.
has it shifted at all in the last couple of years? Because AI is coming so fast.
Yeah,
I'm
and that's what they
curious,
talk
like,
about,
your
right?
your thoughts on it, and maybe you can, set
Yeah.
a 2025, sort of what you think will happen in the future.
I don't know. I wish I could judge the future, right? But I think I just know this: great companies will be built every year, in good times and in bad. I think I read this, and here's the thing: I don't necessarily read as many books as I should. I wish I did, but I read like a lot of articles, and I pick up a lot of things on LinkedIn. Even though one of my emergency contacts thinks LinkedIn's a cesspool. Yeah, sometimes you're only showing the good stuff, right? Like show the bad stuff. Come on, show us the real metrics. Come on, hey, don't put like a chalkboard and say like believe. Get a million likes, that's cute. That is cute. But tell us like yeah, show us like how bad you're down on a company. Yeah. That's what I love to do one time on LinkedIn. But I think honestly, don't follow trends. You have to have like what I have with this book and this philosophy, what I do at Entrepreneur. Like you have to believe in yourself and your plan and follow through on it. And it might not work out. That's the thing. And you might have to pivot, and you should. You could always like it's not blind loyalty. It's not blind, oh my God. But part of why I'm doing this fund the way I am is that I don't think I'm going to find the best 30 companies over the course of 3 years. I think I'm going to meet a lot of great founders, and I wish I gave them a check just to keep tabs on them. And so I think about like Web3, how hot that was coming out of
Mhm.
COVID. And you know what the funniest thing is? And I actually brought this deal, not a little later than than early, but I brought it one time to Trousdale, and like that wasn't what we wanted to invest in, but like, what came out of Web3 in 21 or 22 that we wish you should have invested in? You think it wasn't Web3? You know what it was?
What?
Palmer Luckey, Anduril. Think of that, right? Defense tech. Look at what's happening in the Ukraine or Russia now with drones. DJI, big Chinese company. They make a drone a second, you know? And so, my gosh, right? Maybe that wouldn't have been the best, but like to throw a check in there. And I think they just raised it like 30 billion,
Yeah.
right? And we still got to get out in at 4 billion. You still got to 5x your money in under 2-3 years.
Wow. I mean, Anduril,
A year ago, I mean, right?
yeah, I only caught I didn't even know about the company Anduril. I watched
Right.
a podcast he was on maybe a month ago or so,
Right.
and my mind was fully blown. I've sent
I
it to
saw the
10
pitch deck, yeah.
you saw the pitch deck.
I saw it because and it was an SPV opportunity, right? And I would have that it wasn't a seed SPV. It was like, for their Series C or D. And I was just like, wow, look at these contracts that they have. You know what the number one best customer on the planet is? To this day, the U.S. government, not just any government, the U.S. government, all right? And defense contracts, they're going to get funded. I mean, all this stuff they're talking about, this big, beautiful bill that Elon and Trump are fighting about, they're still going to get paid, the defense contracts, And so it's just like, wow, okay. It was just the antithesis of what you thought was going to come out.
What has been one of the most pivotal decisions that you've made transitioning from your second quarter to your third quarter?
That's a great question. Because I did get married, right? And I have a child now, but I am less of a risk taker when it comes to personal money now as well. Like I do have to set aside budget. Like see, that's not even great. It's like I do an Excel spreadsheet. I'm like, oh yeah, I got to pay for this now, and this and that. And it's just like, you know what? In my second quarter was probably too venture focused. I was probably 80, 90% of my personal assets, not the family, but mine, into venture. because that's what I wanted to create and build and believe in. Now it's just like, no way, I can't do that, right? And part of why I'm doing this fund is like I still want to do that, but with a good team of great people.
Mm-hmm.
But at the same time, like I have to be like, hey, it's not just me anymore. I
Mm-hmm.
have to be more smart. And like, the old Jonathan hung in the side recorded, like, you just, like, just get like, oh, okay, here's 25K, like, something dumb, or I try to find, I think this is the more thing. I know who I am now. I am not, I've been a founder. I'm a better VC than I am a founder. And I'm glad I became a founder. I'm glad I don't want to say I wasted, that I lost millions of dollars becoming a founder. And unfortunately, I did lose some for some of my close, investors, right? But I've made it back in other ways. But it's just like, wow, I learned a lot. And it wasn't just we weren't working hard. It wasn't just like, oh, we didn't have the grid. It just wasn't the right idea. It was the wrong timing of it all, right? But I learned a lot from it, and I write parts of the book too, and I talk about it, and I don't name names because got to make more money to get sued. Um, I only have so much, D&O insurance. But it really is just, I would be more cautious. I'm still like, I don't say I'm a pessimist. Like, I will tell somebody the truth to their face, what I think about their
Mm-hmm.
company, and not just like, oh yeah, great, thanks. Like I love those like Y Combinator interviews. Like what? Like less than 10 minutes, and now they make a decision. But I tell people like that's what we went through. We didn't get into Y Combinator, but like, hey, it was this amount of time. Two partners were on, and you're in or you're out. And if you're not AI agentic or thematic right now, you're probably not going to get in,
Mm-hmm.
and that's okay. Right? Doesn't mean your business is bad, but you have to go find ways like, hey, think about it this way. Be more cash flow positive, right? Like survive, as Paul Graham said, right? You default dead or default alive. Like things I learned from other founders too. And it's so funny. It's just like one of my ex-partners is like ex-partner, and they have their own issues or whatever. But the funny is, I'm not going to name names yet, like I said, but I'm actually going to invest in my ex-partner's ex-partner who he hates right now. Because you think it comes around and goes around, right? It's just like, I think that's not a bad idea. Yes, you both have gone through your own personal issues, right? And defaults, but I'm like, hey, let's give it a chance, right? So I am still optimistic when it comes to venture,
Mm-hmm.
but it's like you just have to know who you are and what makes sense.
Now you have the hindsight of 2020 now to both, you're older, you have
Yeah.
the time to reflect on who you are, but when you're, in your mid 20s, your early
Mhm.
30s, you have that optimism, you have that energy, you have that
Yeah.
excitement. And so what sort of mentorship, what advice do you give to, the romantic VC that's just like, it's going to work. I know it. I feel it. You've had the chance now to see the wins, the losses, and everything in between. How do you mentor your new associate?
Yeah.
How do you get those rosy colored,
Yeah.
everything's going to be big and great, and bring him, back to
Yeah.
seeing some of the downsides?
Part of one of my chapters I was going to tell you about, right? Because chapter one's great, like go on a lot of dates, but like I forget which chapter this is, but like we're still working on the title, but it's like it's it still holds true to me to this day after everything I've gone through. It's like, what's your grudge? Because like, Entrepreneur Ventures is a way better venture firm name, but in my heart of hearts, I still have my real passion venture company called Grudge Ventures, you know, and it's like I want to fund grudges. And I don't mean like,
The chip
murder.
on the shoulder,
Yeah, I
like,
mean like I mean like yes, you want to do this for your family, you want to be successful, but there's that one little thing that the person you want to
mhm,
show up, or this company that made you angry, like just like Palmer Luckey, right? Look, God bless,
totally. Yeah, the
him,
same day.
him and Zuck have made up, right? For now,
Yeah, totally.
right? And it's just like, wow, I have this. This desire. Some people call it petty, some call it vengeance, right? But I think it's like, I don't see it as a negative. I see it as just like, well, what are you passionate about that will get you through the day, that will make you work a little bit harder? I think that's important because like I can't transfer my passion, my energy to somebody. You have to find what they are motivated in. And I think that's what it is for someone like who is just starting off. It's just that, you know, and I'm sure it happens to a lot of associates. And like I heard this from my associate, I thought it was so funny. It's just like, yeah, you think you're interviewing for an associate job. You think you're gonna make general partner? You know what the odds are of that happening? Really low, right? Because you're just another body.
Mhm.
You know, you're just like Goldman Sachs. You know how hard it is to become a partner at Goldman Sachs? You know how many summer associates they run through, associates that are gone after 2, 3 years, and you're good. You're not even a bad one.
Mhm.
It's just the luck. It's the timing of it all. And so showing up the right place, right time. Your mentor got that right position, takes you with you, you know, and or you got a great deal, an opportunity, and that's what it is. It's like to do this game, like you better go on a lot of dates. You better go meet a lot of great people to help you when times are tough, when you need what you didn't think. Cause like, and the worst, the absolute worst is like the person you thought was your emergency contact is the one who screws you over.
Mm.
Oh, that is the worst. You know, it's like that's the guy you thought, you know, and that's why you better be really careful who you pick as that person.
Now, Jonathan, the world is changing. Everything's moving very quickly. I think that when we first started Demo Day back in
Mm,
2017, 2018, I
yeah.
used to say, like,
Ha.
I feel like ventures going through this like renaissance of marketing. There's all these new VC funds and they're all trying to figure out how to differentiate themselves.
Sure.
And that's why I think you've positioned yourself so well with
Oh, thank
Entrepreneur
you.
because media is part of that
Yeah.
differentiation. It's a big, it used to be like with Will from Mucker,
Mm,
oh, if you come to Mucker, like you get a place to work out of, you
yeah.
get a
Yeah.
space. And there were these,
Yeah.
Luma had their accelerator where
Yeah.
you could work out of it and introductions, but like, to be able to go to a founder and say, hey, like, I'm not going to guarantee you're going to get a full page spread, but like you
Yep.
have access to the
Earn it.
the sponsors that
Yeah.
we are working with.
Yeah.
You have access to the writers, you have access to all of these things. It,
Yeah.
it is a
Yeah.
differentiator, especially when you don't have the pressure of like, this is a $200,000-$500,000 check.
Yeah.
Here's a little check and you get access
Yeah.
to all of this opportunity here. How do you see the venture ecosystem changing over the next 5 years? I know it's a big question,
Mm-hmm.
but
Mm-hmm.
do you have a point of view or a philosophy on, we kind of went through this big like SaaS uphill,
Yeah.
like everything was grow, grow, grow out of COVID. Then
Yeah.
we have a dip and it's almost like we're in this catch up. You mentioned a lot of VC funds went out of business, couldn't raise their next fund, partnerships broke up last year. How do you see the next couple of years evolving in the ecosystem?
I think at the end of the day, it's you still have to pick winners. You still have to find successful companies, right? I think some of the bigger players, I think it's harder to do $100 million fund than it is to do a $10 million fund, right? But the problem is you're not going to have the economics, right? This is something where it's like you're not going to get your cushy 200K a year salary to do this. Like, I'm sorry, this is like you're a founder too. I think the best new generation of GPs coming out, they're gonna have it a little bit harder. You're gonna see them a lot. And I see this how like it's funny to me how who gets funded nowadays, right? It's just like, well, yeah, they worked at Andreessen and Mark gave them a starter check and they believed in him. Like, that's great, right? But to like come out of the blue, you have to have something that's differentiated. I see a lot of these VC firms also like maybe going into the public markets, right? They become the next Blackstone, that they're publicly traded, that they are holding on to capital more, right? It's not that easy to exit as it used to be, right? Where hopefully we see great exits are coming, and I think they will. People will need liquidity, people will have opportunities, but like you see a lot of these early stage funds, they're selling out of their positions to the stepstones of the world, to industry ventures, right? And you have to be strategic. I always tell people you have to be a manager of money. This isn't like just, hey, we wrote a check and then 10 years we expect to get an extra zero or two on top of that. That's not going to happen. You have to engineer the win sometimes. You have to be able to be like, you know what? They're raising a Series C now. Maybe we should take some chips off the table. And I have like some GPs in my portfolio that I vested when I was at Trousdale, or me personally. And I'm just like, why haven't you, like, you got in at Y Combinator at a 12 million valuation? They raised at 2.1 billion. Why didn't you take some chips off?
Hmm.
Why didn't you like sell some to return some capital? So that way we could give it back to you. Like, look, there's more money now. We do with the next fund. Like, you have to be able to help. Like, because I had a professor once, unfortunately passed away at MIT, and he helped me develop my chapter 2, actually, Jonathan Burns. It was about like getting to One Sigma confidence. But he said this another part of the book that he wrote was so important. Is like everyone has to be incentivized correctly, right? The marketing people incentives are different than the sales guys. The salespeople, all is grow, 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 and they get paid their commission, right? But it's not the job of marketing or, even the operations people. Like, they're looking for efficiencies, right? They're trying to save money, not just spend money.
Mhm.
So it's like, you better be aligned on your incentives to how you're going to be compensated. And I think that's really important. I think, the days of like, oh, I think great managers now, if I'm investing in a new manager, and I still will, I still take a lot of pitches from GPs. You better show me two things. And you can't hide this. It's, have you actually returned money? And I don't mean like huge DPI. I mean, have you actually made an investment and somehow you got returns on it? Whether you were the GP or not, whether you were an associate or not, it's something that you showed. And two, it's like, are you putting your own skin in the game? Like, if you need to borrow money to do your 2% commit, and there's no more. I mean, I've seen decks where like, oh, we're going to do 1%, but we're split between 4 people. I'm like, you have no skin in the game.
Mm.
I'm putting in, and I have $500,000 into a $5 or $10 million fund. That's either going to be 5 or 10%. Like, if someone gives me $100K check, I'm still 5 times more going to lose than you. So it's just like, you have to, like I said, your incentives have to be aligned. You have to show that like and I get it, it's hard. That's why take your time. Don't just like, I've met people who aren't even 30 yet. They're going to like, oh, I'm going to go start a fund. And I'm like, maybe you have an anchor. That's great. But you got to survive. You got to be able to, it's not about fund one. I tell people that all the time too. It's like fund one is the sizzle. We go back to that, right? The hardest fund to raise is fund two, because you have to showcase what you did in one to justify like, wow, there is something here. It's not like we're lying to each other. It's like, and the goal is like, you might not have returns yet, right? But it shows the work. There's right now, entrepreneur, we don't have a track record. We have a year of investments and they're doing decent, but we don't have, a fund 1, 2 to rely on to get institutional money. So when you're betting on us, it is an earlier bet, but we believe that, hey, Entrepreneur Magazine has been around since 1977. I've been doing this for 13 years in venture. I've made wins and losses, and I publicly share that. I'll tell people that I really believe that we will raise another fund after this. Even if I raise only a small amount of 5 or a full amount of 10, that we will showcase enough that the work in itself will do well, that we deserve the next one. Because my whole goal now, when you ask for LPs what I should look for, that they'll invest in the next fund. That's it. Because they have to believe in your vision and your strategy. It's not just like, oh, I'm just bet it all on Black 29 on the roulette table. It's like, no, there is a strategy that you're ready for the next spin too. The next hand that you're being dealt.
Now, Jonathan, final question here to wrap us up. I love this idea that you talked about breaking life into quarters, and you're just entering your third. When you get to your fourth, let's think ahead in the future.
Yeah.
And you look backwards on your third quarter of life. What are the areas that you hope you have achieved? What are the areas that you hoped you had navigated in the right way? If you could almost, I know it's not looking back at your full legacy, but what do you want the legacy of your third quarter to be? Honestly,
that I made more friends and people in this business that like, if I write my memoir, that like, I'll have so many great testimonials, that's really what it is, that like people can speak of you, right? It's customer reviews, right? When you're buying something on Amazon, you're not looking at the customer reviews, how many stars, you're on Uber, how many stars are you getting? Like, gosh, I hope I leave a 4 out of 5, right? I don't think I'm going to get a full 5 out of 5. That's not going to happen. There's no 100%, but gosh, I hope I have a pretty good, rating.
Jonathan, it's been amazing having you back. You're a great friend to myself, to Coefficient Labs, to the Demo Day community.
Of course.
From everyone listening at home, I'm Sean Goldfountain from Coefficient Labs, and this is Demo Day. Go check out Jonathan Hung at Entrepreneur Ventures. Let's go.